Good afternoon. You can hear me at the back? So we have a panel which is a bit different from the previous one. This is about investment and investors' perspectives. For many of us, including me, the first term, venture capital, is a bit of a complex term and an enigma for many of us. Very few understand what they actually do, how they invest, and where do they get their money. The second one is it is venture capital investments in deep tech, namely 3 or 4 main topics, which is actually the theme of the event. And deep tech is another term which is equally exotic and abstract. It covers many topics, it excludes many, and very few even know what it covers and what it excludes. So it's equally confusing for someone who works in deep tech. Now, if you say venture capital investments in deep tech and deep science, that makes it even more complex. Now, most of the deep tech systems in the recent past, or till recent past, it was essentially about software. But now, you find them deep tech to be in systems. It includes manufacturing. So now you have the perfect storm of venture capital, deep tech, and manufacturing. So to unravel those mysteries and how the investors who run those funds invest in these areas, I have Arjun Rao and Murali here to share their perspectives. But just to warm up the session, to start with, just to get the basics right, let me ask a very simple question to both of them, starting with Arjun Rao. Do you have an investment thesis when you say you are a venture capital fund in deep tech? The same question goes to Murali, but I will let Arjun answer first.
Yeah, thank you, Ivy. And lovely to be here on this occasion. And it's on the very basics, right? First, I represent Speciale Invest. We're an early stage VC fund investing in, like IVK said, deep science and tech ideas, right? We've tried to define this in a few ways, right? And take a few parameters that help us identify and narrow down as to say what is deep tech and what sort of companies or what sort of ideas that we prefer to invest in. 2-3 lenses that we take. One is, is there substantial technical insight and complexity in the tech and the product or the platform that an entrepreneur is building, right? The extended way of saying that is there IP? Is it hard to build? Is there some unique insight because of which they've arrived at that opportunity or that problem statement? Usually, not all the time, but usually that derives from a fair few years spent in that technical domain for one or more of the founders that are building that idea, right? Let's take some examples, right? Be it space technology or robotics or semiconductors. Unlikely that the founders would have had different experiences either in academia or in industry, but wake up one day and say either they'll build a satellite or a rocket or they'll build, some new green energy device, etc. So I think founder background, deeply technical, usually deep technical insight on some problem statement that has still not been solved, right? Leading to IP and complexity of building it. And then is that new solution substantially better than anything else that's out there, right? What you want deep tech to be is not incrementally better, but disruptively better. Another lens to take a look at is it 5 times, 10 times, 20 times better as opposed to, 20% better, 40% better, 30% better. So our lens is this is what entails deep tech. It takes some time both on the research side and then on the development side. So R&D, you split into research and development. Research can possibly take much longer and can be done in academia. But D, which is product development post-research, is possibly where commercialization is closer and therefore venture capitalists like us get super interested. So that's sort of the primary lens with which we are looking at companies. They're not business model innovation, they're not go-to-market innovations, they're primary tech product innovations coming from very specific type of entrepreneurs. And that's what our capital is for. Some examples of domains being space technology, climate tech, energy, industrial stuff, semiconductors, biotech, and of course there is AI, robotics, etc. But these are some examples of areas. So that's sort of the lens which we take to say, this is what deep tech companies entail, and this is where we want to invest.
Murali, same thing. And then if you have a different view on how you define, that will be good to know.
Sure. I think the view almost sort of will remain similar, but I will introduce us as a fund also. So Inflexor Ventures, we have been investing in this in the technology domain for the past 10 years. So the way we look at things is that we want a unique value prop in each of the company that we are investing, right? That can be deep tech, that may not be deep tech, right? But eventually what happens is we have done about 25 investments. So in all these investments, eventually what happens is when we are doing an opportunity analysis, the requirement of this unique value prop means that you will sort of gravitate towards harder to build technology, right? And to sort of take off from Arjun's point, so that's what we think what is deep tech, right? So it is a hard to build technology, and that hard to build is, it can be either founders inside, the technological knowledge or the research that is involved, or it is just it's hard to build, right? You have to have a lot of work. Like an example is Gadadhar, who was here in the last panel. That's one company that we have invested in. He's put in 10 years of work before it got actually to the place where he can raise funding from a VC fund like us, right? So it is years of work and supremely hard to build, right? So that's broadly our thesis, right? And to just deep dive on what we look at, one thing is founder product fit, right? If there is a founder pursuing an opportunity, we need to see a fit between what his background is, what his pedigree is, and what is he doing right now, right? If there is no match, I don't think we'll be able to convince ourselves that the founder can pull it off, right? And the second is obviously, while the technology can be deep, right? Does it have a real commercial application 2 years down the line, 3 years down the line, right? We should also note that VCs, I mean, there is often this question asked why VCs don't fund really deep technology. The problem here, or the conundrum here is VCs operate with a finite fund life, right? So, and we need to raise money, deploy it, and return money within that finite fund life, and hence whatever opportunity we are looking at has to be commercially viable in the next 2 or 3 years. Otherwise, it may not make sense for a fund to invest, right? So these are broadly some parameters with which what we look at, right? So that's something that I want to add.
So my second question will be a little more provocative, but I'm going to combine two parts of the question here. The conventional view of venture capital is that they don't fund manufacturing oriented or manufacturing businesses because they don't want to fund inventory or working capital for it. But in most complex systems, which involve deep tech and deep science, you need a finished product to actually make use of it or commercialize it. So the question that often comes up is, while your investment thesis may be deep tech, deep science, do you invest along the value stream of the same technology so that you take it to manufacturing? Or in biotech, I'll pick drug discovery. In space tech, I will pick manufacturing ready one. Maybe in quantum, I'll pick something else. So do you just go by discrete points of interest in each of the deep tech areas, or do you do it along a value stream? So that will be good to know. Yeah, Murali?
Yeah, so, I mean, in our case, I will take an example of Atomberg, right? Atomberg, when we first did Atomberg, it was a deep tech company for us, right? The reason why it was deep tech is, while it is a consumer company today, it was a deep tech company at that point of time because they were innovating on a technology which was which was not disrupted for the past 30 years. They took a BLDC motor and applied a microchip into it, and that's how they got the power savings, right? So at that point of time, it was a deep tech company when we originally invested in that company. So we didn't invest just for the design, right? So we very well knew that it has to go into manufacturing only when the full sort of stream is completed, that's when the actual value gets delivered to the shareholders, right? So that's our view, and that has been true for Bellatrix, which is a space tech company that we have invested in, and Nopo. Nopo is also sort of designing, researching, and now manufacturing the single-walled carbon nanotubes, right? So the point that I'm trying to drive here is just design and then licensing it out may not be the full unlock of the value that is there in a company, right? We think, our view is that it has to be a complete investment, right? You have to go manufacturing also.
Arjun?
Yeah, I'd only add a couple of layers to that in terms of, one, from our stage vantage point, which is super early. Obviously, our focus is not on the inventory part because the company is not yet at that stage where market adoption has already happened, and hence there is need for capital for inventory and working capital, etc. Correct? There will be a stage, hopefully, that when it gets there, but in the beginning, the complexity lies. And just to pick up on the point of manufacturing, it lies in the iteration of the early product, right? How many prototypes do you need? How many subcomponents do you need? How long does that take? What is that supply chain? There is complexity there. You're not at scale, but you have to go through manufacturing partnerships or do it in-house. I think that our view would be nuanced in terms of saying in some cases, it'll be very clear that you have to do that manufacturing in-house, right? Because there is no expertise outside. Because you're doing something so different and so unique and so hard that possibly you cannot even find a partner to do the manufacturing aspect, even the prototyping, etc. In that case, you have to then build the machining inside, you have to do the manufacturing aspect and keep both the IP design as well as the manufacturing process in combination as the moat, if you will. Correct? Stage after that, possibly you have market adoption after possibly a few tens of thousands of maybe fans sold by Autumnberg. You need inventory, and I would only kick the can down the road saying maybe that job is for later stage investors or private equity, but that is one. There would be other cases where you do the tech and the design, but the ecosystem for that particular tech and that particular product, you can possibly find partners outside who will do the manufacturing. And I think it's a case-by-case decision, right? To say
Agreed.
Which business should do design and IP themselves, but outsource manufacturing, as long as you get the right partner. And you can still capture value from your design and out licensing perspective. I would take it as a case by case. Yes. We have seen both.
Yes. Actually, that's an important nuance that Arjun has added, rightfully so. It depends really on the stage at which we are investing, right? And also in some cases, if it's a semiconductor company, right? Sometimes they'll say, okay, I'll build the product and then sell it off to someone who can actually build the fab, right? That has happened in one of these cases, one of the cases that we funded, right? So it really depends case to case and really on the stage at which the fund is coming in. But I mean, if you want an absolute, I would like to sort of travel the full journey, right?
I think the full value capture is 100% true if you can do everything, right? But you need capital at different stages and different quantums of capital. One has to keep that in mind, and depending on that point in time decision and constraints, you can take alternative models in every industry.
So now coming back to something more operational related matters, currently, which funds are you investing from in these areas, in deep tech areas? And if you have already done the investment or your investment period is over, did you harvest any of those returns so far? Because most of the deep tech funds, there are many, but the very few show any exits. So I think it'd be good to know your lived experience as well as Murali's.
Sure. I think just to set context, we've been around for 8 years now. We're at the fag end of deployment of fund number 2, right? Every fund is about 8 to 10 years. 10 years at the outer limit, 8 on the lower limit. And in the first 3 to 4 years is when we're making investments. So we started in 2017, invested till 2021 from Fund 1. We had about 18 companies. And from 2021, we launched Fund 2, which is what we are deploying. We are almost done with that. In every fund, we do close to 20 companies, right? And just to talk about exits, etc. Fund 1, we've been fortunate to some degree, I would say, and some work has been done. We've gotten 5 exits, right, which were M&As 4 portfolio companies that have returned some capital for our LPs, right? And there has been some partial exit in one of the high-performing companies that has also helped return some capital, right? So we're in the 8th year of Fund 1 or 7th year of 7+ years of Fund 1, but we do have another 2.5, 3 years. So this is a time when we would be proactive about thinking about exiting and harvesting, the investments that we made in the first 4 years from 2017, correct? Fund 2 that way is relatively younger, 3 to 4 years, so companies are still developing. We're of course completing investing, but we will keep supporting them over the next few years. I would say in a 10-year time horizon, somewhere in year 7 onwards, you start thinking about harvesting, right? So our experience so far, Fund 1, because we're at year 7 plus 1, 8, right? We've gotten 5 exits. That has been helpful. We've got some partial exits, and we will look for more as we go along, given the 10-year time limit, which, Murali previously pointed out. Fund 2, of course, earlier. We are hoping to launch another new fund